Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 performance over a number of time frames. Happy New Year, Ryan. It's great to see you again. Welcome to 2021. And let's pull up our first chart here and take a look at what was an incredible year of performance for the index.
Yeah, Jill, it's great to be here. Thanks. And it truly was an incredible year when you see QQQ up 48.6% relative to the S&P 500, up 18.39%, and the S&P 500 value up only 1.35%. So you're looking at over 30 percentage points outperformance of the S&P 500. As you said, truly a historic year driven by information technology, communication services, consumer discretionary. And as we look forward to this year, right, only 3 trading days, but year to date, you look at QQQ, the S&P 500, and the S&P 500 value, all kind of reasonably in line with one another, right? QQQ down 65 basis points, the S&P down 76 basis points, and the S&P 500 value down 67 basis points. Today is a marked departure from that, as we've seen this pretty significant value rally with news of the Georgia elections essentially showing a Democratic-controlled Senate. And the read-through there is that we're going to see an increase in federal spending. Now, if you look back to late October and very early November, we sort of saw some positioning there for a similar outcome, right? This blue wave. And we saw a lot of interest in a lot of value stocks off the same basis that you're going to see federal spending increase and essentially spur economic growth. So, essentially this reflation trade is on today, with financials certainly leading the pack. Additionally, I think from the value side, energy got a boost from Saudi Arabia's voluntary 1 million barrel a day production cut. We've got WTI, at least last I looked about half hour ago, trading up over $50 a barrel, which is a level that we haven't seen since February 2020. So, certainly the read through here is reopen, recovery trade, and value outperforming on the day.
And if we take a look at your next chart here, the reopen trade, the last 4 months of the year, tell us about that and then how that correlates to our last chart, the longer term look.
Yeah, absolutely. And we've seen this value outperformance here for the better part of the last 4 months, right? Towards the end of August, we started to see more interest, I think maybe on a risk reward standpoint, into some of these more unloved names and unloved sectors as investors were looking to position not only for this potential Democratic blue wave, but beyond that, sort of a recovery off of this COVID-driven recession. And we've seen this recovery reopen trade in fits and starts, right? You get a decent data point on a COVID vaccine or treatment over the past couple months, and you saw value would outperform. On the other hand, you'd see, unfortunately, some of these sobering statistics in terms of incidence rates that are climbing, and you'd see it's sort of that work from home trade, and certainly QQQ benefit from that. But I think broadly, when we're looking, we are in the recovery phase of an economic kind of cycle, and it likely will be fits and starts. A lot of it hinging on the success of a COVID vaccine or treatment kind of rollout plan. But I think you'll probably see these value stocks on the back of this optimism, combined with potential increased federal spending, continue here as we head into 2021. A lot of questions that I get is, okay, so we're seeing value outperformance. Okay, the tide is finally changing, and this is it for growth stocks and QQQ. Not necessarily correct, right? I mean, I think too often we look at things as just a binary outcome, right? It's all in on value or all in on growth, and that doesn't have to necessarily be the case. And my last chart is looking at 09 through the end of 2010. So essentially, we're looking at the closing trough of March the 9th, 2009, off of the great financial crisis through December 31st of the following year. And really just to illustrate that, coming off of this very deep recession in a recovery phase where you're getting help from an accommodative Fed, you have an environment where value stocks and kind of growth-oriented strategies like QQQ can both benefit from that given environment. And in that time frame, you saw both of the QQQ as well as the S&P 500 value index outperform the broader S&P 500. So, I think at the end of the day, we're going to keep an eye on this growing economic recovery. We're going to keep an eye on what's going on the COVID front. But, I think in general, we are entering a period that could be beneficial for domestic stocks across the board.
Great insight as always, Ryan. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.